Hey, what's up everyone? Welcome back to the channel. Today, we're diving into some exciting alternative investments you should consider this year. That's right, we're going beyond the usual stocks and bonds to explore some unique opportunities to potentially grow your wealth. If you're looking to diversify your portfolio beyond the traditional stocks and bonds, this video is for you. We'll be covering 5 alternative investments that can offer higher returns, hedge against inflation, and add some excitement to your investment journey. Remember, I'm not a financial advisor, and this is not financial advice. It's crucial to do your own research and consult with a professional before making any investment decisions. All right, let's get started. Now let's kick things off with real estate crowdfunding. You know, real estate has always been a popular investment choice, but it often requires a significant amount of capital up front. That's where real estate crowdfunding comes in. It allows you to pool your resources with other investors to invest in real estate projects, even with a smaller amount of money. Think of it like this. Instead of buying an entire apartment building yourself, you can own a small piece of it along with other investors. This way, you can participate in the potential appreciation and rental income of the property without the headaches of being a landlord. There are various real estate crowdfunding platforms available, each with its own focus and fee structure. Some platforms specialize in residential properties, while others focus on commercial real estate or even more niche sectors like senior living facilities or self-storage units. Before you jump in, it's crucial to carefully vet the platform and the specific projects you're considering. Look at the track record of the platform and the developers involved in the project. What kind of returns have they generated in the past? What are the fees associated with the platform? Remember, real estate crowdfunding is still a relatively new industry, and like any investment, it comes with its own set of risks. The value of your investment can fluctuate, and there's no guarantee of returns. It's essential to do your due diligence and understand the risks involved before investing. However, if you're looking for a way to diversify your portfolio with real estate without breaking the bank, real estate crowdfunding can be a compelling option. It allows you to access a wider range of real estate investments and potentially earn passive income through rental yields or property appreciation. Just remember to start small, diversify your investments across different platforms and projects, and never invest more than you can afford to lose. Real estate crowdfunding can be a great addition to your portfolio, but it's essential to approach it with caution and a long-term perspective. Next up, let's talk about peer-to-peer lending, or P2P lending for short. Now this is where things get interesting. Instead of going through a traditional bank, you can lend money directly to individuals or small businesses through online platforms. Think of it like this. You become the bank, providing loans and earning interest payments in return. It's like cutting out the middleman and potentially earning higher returns. Platforms like Lending Club and Prosper connect borrowers with investors, making it easier than ever to participate in this alternative investment. Now, you might be thinking, isn't it risky lending money to strangers online? And you're right, there are risks involved. Borrowers on these platforms may default on their loans, which means you could lose some or all of your investment. That's why it's crucial to diversify your investments across multiple borrowers and carefully assess the risk profile of each loan. Most platforms provide detailed information about borrowers, including their credit scores, debt-to-income ratios, and loan purpose. By diversifying your investments and choosing loans carefully, you can mitigate the risk and potentially earn attractive returns. Some platforms even offer auto-investing tools that automatically allocate your funds across multiple loans based on your risk tolerance and investment goals. Peer-to-peer lending can be an excellent way to earn passive income and diversify your portfolio beyond traditional investments. However, it's essential to remember that past returns are not indicative of future results, and there's always the risk of borrowers defaulting on their loans. As with any investment, it's crucial to do your own research, understand the risks involved, and invest only what you can afford to lose. But if you're looking for a way to potentially earn higher returns and be a part of a more inclusive financial system, peer-to-peer lending is definitely worth considering. Now let's talk about cryptocurrencies, the wild west of the investment world. You've probably heard of Bitcoin, Ethereum, and all the hype surrounding them. But what are they really, and are they worth investing in? In a nutshell, cryptocurrencies are digital or virtual currencies that use cryptography for security. They're decentralized, meaning they're not controlled by any government or financial institution. This has made them popular among investors looking for an alternative to traditional currencies and financial systems. Bitcoin, the first and most well-known cryptocurrency, has seen its price skyrocket over the years, creating countless millionaires along the way. But it's also been incredibly volatile, experiencing massive price swings that can make even the most seasoned investors sweat. So, are cryptocurrencies a good investment? Well, like any investment, it depends on your risk tolerance and investment goals. Cryptocurrencies are highly speculative and volatile, and their value can fluctuate wildly in short periods. However, they also have the potential for high returns, especially in the long run. As more businesses and institutions adopt cryptocurrencies, their value could continue to rise. But it's essential to remember that this is still a relatively new and untested market, and there's no guarantee of future returns. If you're considering investing in cryptocurrencies, it's crucial to start small, diversify your investments across different cryptocurrencies, and only invest what you can afford to lose. It's also essential to do your own research and understand the risks involved before investing. Cryptocurrencies can be a high-risk, high-reward investment. They have the potential to generate significant returns, but they can also lose value just as quickly. If you're comfortable with the risks and believe in the long-term potential of cryptocurrencies, they could be a worthwhile addition to your portfolio. Let's move on to something a little more tangible, shall we? Precious metals like gold and silver have been a store of value for centuries. They've weathered economic storms, wars, and all sorts of financial crises, making them a popular choice for investors looking for stability and a hedge against inflation. You see, when the economy takes a downturn and the value of paper money declines, precious metals tend to hold their value or even appreciate. That's because they're a finite resource, meaning there's a limited supply of them in the world. Now, I'm not saying you should go all in on gold bars and bury them in your backyard, but having a small allocation to precious metals in your portfolio can provide some diversification and potentially protect your wealth during times of economic uncertainty. You can invest in precious metals in several ways. You can buy physical gold or silver coins or bars, but that comes with the hassle of storage and security. You can also invest in gold or silver ETFs, which track the price of the metal or mining company stocks, which can offer leverage to the price of gold and silver. The key here is to find an investment method that aligns with your risk tolerance and investment goals. If you're looking for a hands-off approach, ETFs might be a good option. But if you prefer to hold the physical asset, then buying coins or bars might be more suitable. Remember, precious metals are not a get-rich-quick scheme. They're a long-term investment that can provide stability and a hedge against inflation. So, if you're looking for a way to diversify your portfolio and potentially protect your wealth during turbulent times, precious metals are definitely worth considering. Finally, let's talk about art and collectibles. Now, this one's for those who appreciate the finer things in life and see the value in owning a piece of history. Investing in art, antiques, and collectibles can be both profitable and enjoyable. Imagine owning a rare painting, a vintage car, or a first-edition comic book that appreciates in value over time. It's like owning a piece of history that also happens to be a good investment. Plus, it's something you can admire and enjoy, unlike a stock certificate or a bond. Now, I know what you're thinking. Art and collectibles are only for the ultra-wealthy, right? Well, that's not entirely true. While it's true that some masterpieces can fetch millions of dollars at auction, there are also affordable options available for those just starting. The key is to do your research, identify your niche, and buy what you love. Whether it's vintage watches, rare stamps, or antique furniture, there's a market for almost everything. You can find hidden gems at auctions, antique shops, and even online marketplaces like eBay. However, it's essential to remember that art and collectibles are illiquid assets, meaning they can be challenging to sell quickly if you need to access your investment. It's also a market that requires knowledge and expertise. You need to know what you're buying, how to authenticate it, and how to properly store and care for it. But if you're willing to put in the time and effort, investing in art and collectibles can be a rewarding experience. It's a way to diversify your portfolio, potentially earn attractive returns, and own something truly unique and valuable. That's it for today's video. We've covered 5 exciting alternative investments that can potentially boost your returns and diversify your portfolio beyond traditional assets. Remember, these are just a few examples, and there are many other alternative investments out there. Thanks for watching. If you found this video helpful, make sure to give it a thumbs up and subscribe for more investment tips and strategies. Don't forget to hit that notification bell so you don't miss any future uploads. Let me know in the comments which alternative investment you're most interested in. Are you thinking about real estate crowdfunding, peer-to-peer lending, cryptocurrencies, precious metals, or art and collectibles? I'm curious to hear your thoughts.